Hello, everyone. Joshua Hayes at BigWaveTrading.com. It was an interesting week, to say the least. However, the market, I've been telling you guys and I've been showing you guys that tickets indicator of mine has been living below the zero line and stair stepping slightly lower during that period of time for the past 3 months on the SPY. The same situations with the QQQ. But when you have the RSP and IWM moving like this and the MDY moving like it's been, there's a rotation out there. It's making it a very choppy market, a very volatile market, making no real progress. However, I'm able to eat into the drawdown because my biggest position, GEV, has been working with the market being under its current kind of crazy conditions. But recently, the SPY has kind of changed. So this is a daily chart, but on the hourly time frame, what you're not going to see in this chart is that while the SPY overall, if we did a linear regression, we could see it's moving higher. My tickets indicator on the hourly is moving in this direction and is below the zero line. So there's negative divergence there to match up with the daily time frame. Now, on this chart, we're looking at just the SPY here. We could do the same thing with the QQQ and anything else, but I just want to keep it simple today. SPY, we start to break down below the 50, but we recover. But look at the short-term moving averages. They look pretty poor, but the 5 and the 9 is not living below the 21. That's a key thing to me. Back here, we do the same thing. Hey, now we're below the 21 on the 5 and the 9. But on this most recent move higher, from the last time we were showing those short-term moving averages decline, we actually printed a new all-time high. This most recent bounce, we did not print that new all-time high. We've re-rolled over, and now we have the 5 and the 9 EMA below the 21. So all three moving averages are in alignment, and now the 5 EMA is below the 50 with the 9 EMA about to cross the 50 SMA. Want to make that clear. This is SMA. So this is a different configuration than anything we've seen before during any of these rollover periods. So this might be the one that sends it lower. Also, while this is happening, while my tickets indicator is living below the zero line, and while my ratio charts are very ugly, and just to give you an example, can't do it here, but this is what the XLY looks like, this is what the XLP looks like. And I always tell everybody that's a member of Big Wave Trading, I follow 11 ratio charts. 6 are extremely important that measure aggressive versus defensive, growth versus value. But if you force me to just focus on one, it would be that XLY to XLP ratio, and it just continues to get uglier and uglier. And even after today, XLP up again today, XLY down. So it's only getting worse. Well, the other, we're just stacking up all the variables in an equation that tells me, do I want to be risk on or risk off? Right now, it's risk off. And here's another problem. We're in a medium squeeze. We were in a medium squeeze here. We resolved higher, and we were doing good until the chop really got aggressive. We're in a medium squeeze again. Now, the last time we were in a medium squeeze, double red, but we still have one green, right? These are my on-off indicators. We're currently in a medium squeeze. We've now got a red momentum bar on our price chart, and I'm triple red on my 3 green light, red light indicators. So everything's lined up for this market to roll over. Now, how far down do we go? I don't know. I drew this green line showing everybody that there's an open gap all the way down here. So is it possible that we go down this far? Absolutely. Is it probable? No. Is it probable we test the 200 EMA or 200 SMA? Yes. Is it possible? Yes. Is it possible we test the 500 EMA? Yes. Is it probable? No. Now, listen, what I look for once we actually start selling off and rolling over, now I'm trying to track sentiment. First off, positioning. Completely neutral across the board. SPY, QQQ, DIA, IWM. Neutral, neutral, neutral. Nothing to gain there. Sentiment is extremely bullish. Cash levels are extremely low with the retail. So I'm all ready. Who's left to buy? No one. So that's where I'm at. However, when a market starts selling off, if I see retail get more bullish, that indicates to me we could have a deeper correction. If the bears increase and the bulls decrease as you start to sell off like we did recently, or have been kind of like chopping nowhere on the SPY, QQQ, it's worse. You can see the QQQ. We've got full alignment here. 21 below the 50, 9 below the 21, 5 below the 9. So that's in full alignment for a possible really ugly rollover. Same thing, medium squeeze coming out, loose squeeze, trend down, triple red, not good. Not a good setup. But this past week, I didn't check II, but I saw that the AAII bulls and bears, bulls decrease, bears increase, and I saw on the NAAIM, while it's still elevated, it did fall to 80. So at least the crowd is getting more bearish. To me, it's the difference between a negative 10% correction or a negative 20% correction. So as you sell off, as long as that the fear is growing, it makes me think the decline isn't going to be as severe. And once again, I see zero credit risk out there whatsoever. But there's definitely signs to be, cautious here. It's a risk-off environment. It's February. There are so many. If I have to add metrics and internal indicators to price, they're all bad. It's just not good right now. But there is a lot of good news out there, and that's coming in the way of earnings. There's been a lot of earnings winners. I've been adding a lot of names to my list, and I'm still not getting that perfect, great, grade A setup. So MU's earnings on this day was game changing, but there isn't a game changing move here. So I'm kind of looking for an inside hammer, a pullback, something off the 21 EMA, and I just never got it. I just never got it with MU. It is what it is, 75% gain missed. Then there was GLW recently. After this Meta news right here and a good earnings report, I was looking to try to get long this name. And once again, I can't get my entry. And it's basically because the market is just in a situation right now where the environment is not positive for being aggressive in these stocks. So I want to show you guys something. VAL had a great earnings report. It also combined with another stock. So, another stock basically took it over. But look at the volume truncation of all the previous volume bars. That's what I like to see. But because it's combining with another stock, I can't remember, was it DCOM? I don't remember. That definitely wasn't it. But there's that inside hammer candle that I look for. You get long above the high of the day, or you put a buy stop above the closing price. This is not one that I particularly was interested in, but I just wanted to show you what happens when the hammer candle does set up and it works. This is what normally happens in a stock that I'm super focused on. VAL wasn't one of them, but lately there's been some good earnings winners. Now tonight, ANET, kind of like an MU kind of like move. I'm hoping I get a setup. Was the earnings announcement good enough for me to buy above the opening price? No, it wasn't. So I'm going to pass on this. Might regret it, but that's why I'm showing it to everyone tonight. HCSG, I like this hammer candle here, but the earnings report, it's nothing that really makes me lose my mind, okay? But it did have the heaviest volume in 1 year. So here's another candidate for everybody. Don't worry, guys. I got two that I'm personally taking on Monday. You can join me or not. It's up to you. EQIX, another good earnings report yesterday. Inside hammer candle today. I don't like that it closed lower than where it opened, and with the decrease in BOP, that's a no-go for me, but it's another good setup out there. AMEX is a recent earnings winner. Nice hammer candle today. This has everything but the catalyst behind the earnings move. It's good earnings, but good earnings in this market to me isn't good enough. And then SUZ, is this an inside hammer candle? Nope, because the wick of the high of the day is 1 cent higher than the day before. So you can go ahead and remove this one, but this was another potential inside hammer candle that I wanted to show everyone. And so out there also other stocks of interest before I get to the new longs. FHI has earnings, I believe, next week, but this looks good. TEN, similar look, looks good. They look like they still have earnings out. DG, same thing, looks like that, but I think earnings might have been back here based on the way it looks. But this one has a great look to it, and it's in the right sector right now. So DG looks good. ST has earnings next week, but this also looks good. So in a much hotter market, I would consider all these. In this market, no thank you. And so today, I want to go over my two new long positions, but before I do, I want to look at FSLY. So in a hot market, this stock yesterday had its highest volume ever. You can see the volume truncating all the previous volume bars. Heaviest volume ever. Breaks out of a long base that's at least 3 months long, neglected base, does so. It's a buyable gap up, AI related, amazing earnings. Though they use the word record in the PR multiple times. CEO is very bullish. Just a great earnings report. Now listen, I live on Maui. Buyable gap ups aren't going to work for me. But this stock was the only one I would have considered yesterday as a buyable gap up worthy name because it's a former runner back in 2020. Short float to over 10%. Great, great, great earnings report, record numbers, Bible gap up all day long, depending on how you want to do it. 1 minute orb, 5 minute orb, VWAP reclaim, opening printing price reclaim, whatever. It moved fast. Now on my end, when the earnings report's good enough, I will buy above 1604 the next day. 1604 will be my good to cancel buy stop level the next day, and I'll get long. Today, if I would have done that, would have had a nice 13+% gain. And if you think you're crazy for chasing stocks like that, I'll just review a stock that I didn't take because of that situation. Groupon, game-changing turnaround earnings report. Didn't buy it after day one. Look at what happened right after, 34% move. Happened again. Gave another great, I forgot what that catalyst was, probably earnings also. 52% move without me because I wouldn't chase after the day one move. So that's what's possible, and that was a good market, by the way. And by the way, Groupon's first one, this was actually when the market was selling off, showing extreme relative strength with that highest volume ever move. This one, the market was already in the confirmed uptrend. So trying to teach some lessons here. So FSLY, just a reason I'm passing on it. Now tonight, CGNX. It had its highest volume ever yesterday, broke out of it at least a 3-month long neglected base. Amazing earnings report, beat on the top and bottom line, raised guidance, issued a dividend, share buyback announcement. That's perfect. Today, good inside hammer candle. Now listen, could have bought it above 58.67, so I'd already be long, but I just didn't do that yesterday because of the way the market looked. No follow through today, inside hammer candle, so I'll get long. Half my buy stop will be above today's high of the day. The second half will be above yesterday's high of the day, and I'll be calculating my size, 1R risk, 1% of the entire account capital, to this low. However, in this tape, do I expect and will I be do I expect anything to work without any kind of back and filling? No. Will I be upset if it fails? No. But CGNX, highest volume ever, max green bop, relative strength line explosion, record numbers, buyback, dividend increase, should have been a new long. Going to go ahead and take it. Now today, I have another one. MGA. Now the base isn't neglected for as long, so that's already one strike against it. Second strike, MGA isn't really a high-tech stock. It is an auto parts stock. It's a good, strong sector right now, but I wouldn't consider it FSLY CGNX quality with the current hot theme that is AI semiconductors. Nice gap up on earnings, highest volume ever. BOP goes to max green, relative strength line explodes. Same thing. Great earnings report, beat on the top and bottom line, share buyback, dividend increase. This one, because of today's session in the overall market, even though it was weak, it wasn't terrible. I'm going to do a buy stop above 68.73, risking 1R if my account capital is this low. All right, everybody, a little bit of a longer video lesson, but I wanted to teach some lessons. I'll go ahead and wrap it up there. Have a wonderful rest of your weekend, everyone.